Welcome to Agricultural Science for JSS 3. Today we study agricultural credit and finance. What is agricultural credit? Agricultural credit is the money or resources lent to farmers to enable them to purchase inputs, seeds, fertilizers, equipment, and develop their farms, with the expectation that they will repay when the harvest is sold. Why do farmers need credit? 1. To buy farm inputs, seeds, fertilizers, pesticides, herbicides. 2. To purchase or rent equipment, tractors, irrigation systems. 3. To pay labor, hire farm workers. 4. To store produce, build or rent storage facilities. 5. To develop infrastructure, farm roads, fences, water systems. 6. To survive the pre-harvest period when there is no income. Types of agricultural credit. 1. Short-term credit. Lasted for 1 year or less. Used for purchasing seeds, fertilizers, pesticides, and paying labor. Repaid after the harvest season. 2. Medium-term credit. Lasted for 1 to 5 years. Used for purchasing equipment or small tractors, irrigation pumps, and making farm improvements. 3. Long-term credit. Lasted for more than 5 years. Used for land purchase, large irrigation systems, or building processing facilities. Usually secured by land or property. Sources of agricultural credit in Nigeria. 1. Bank of Agriculture, BOA. A government-owned bank specifically for farmers. Provides loans at low interest rates. Operates across Nigeria. 2. Commercial banks. Private banks like First Bank, UBA, GT Bank, etc. Provide agricultural loans but often at higher interest rates and require collateral security. 3. Microfinance banks. Small banks that serve rural farmers and small-scale businesses. Provide small loans without requiring large collateral. 4. Cooperative societies. Farmer cooperatives pool their savings and lend to members at low or no interest. One of the most accessible sources of credit for small farmers. 5. Government programs. E.g., Anchor Borrowers Program, CBN, which provides low-interest loans to smallholder farmers tied to specific value chains. 6. Informal sources. Money lenders, relatives, neighbors. Often at high interest rates or without formal terms. Challenges of agricultural credit in Nigeria. 1. High interest rates make loans unaffordable for small farmers. 2. Lack of collateral. Most small farmers do not own land titles. 3. High risk of famine, unpredictable weather, pests, market prices. 4. Poor record keeping by farmers. 5. Distance from banks. Many rural farmers are far from banks. Remember, agricultural credit equals money or resources lent to farmers to enable them to purchase inputs plus develop their farms, repaid when harvest is sold. Why farmers need credit? Buy farm inputs equals seeds plus fertilizers plus pesticides plus herbicides. Purchase or rent equipment equals tractors plus irrigation systems. Pay labor equals hire farm workers. Store produce equals build or rent storage facilities. Develop infrastructure equals farm roads plus fences plus water systems. Survive the pre-harvest period when there is no income. Types of agricultural credit. Short-term credit equals lasted for 1 year or less, used for purchasing seeds plus fertilizers plus pesticides plus paying labor, repaid after harvest season. Medium-term credit equals lasted for 1 to 5 years, used for purchasing equipment equals small tractors plus irrigation pumps plus farm improvements. Long-term credit equals lasted for more than 5 years, used for land purchase plus large irrigation systems plus building processing facilities, usually secured by land or property. Sources of credit. Bank of Agriculture / BOA equals government-owned bank specifically for farmers plus provides loans at low interest rates. Commercial banks equals private banks plus provide agricultural loans at higher interest rates plus require collateral. Microfinance banks equals small banks that serve rural farmers plus small-scale businesses plus provide small loans without requiring large collateral. Cooperative societies equals farmer cooperatives pool savings plus lend to members at low or a no interest equals most accessible source for small farmers. Government programs equals anchor borrowers program / CBN equals provides low interest loans to smallholder farmers tied to specific value chains. Informal sources equals money lenders plus relatives plus neighbors equals often at high interest rates. Challenges: high interest rates, lack of collateral, high risk of farming, poor record keeping, distance from banks. Thank you.